Today, a very important inflation report will be released. Who could be behind the altcoin wipeout on October 10th? An incredible coincidence and clear signs that the hype and good times for the crypto market are still ahead. Welcome to the daily review of the cryptocurrency and Bitcoin market. Today is October 24th. On the Bitcoin chart, nothing much has changed. The price continues to move within a triangle pattern, and any attempts to open new long positions here are quite foolish. Why? Very simple. The nearest strong resistance lies between $117,000 and $118,500. Even with positive news, this zone will likely be a major challenge for the price, meaning the potential upside is limited. Meanwhile, a proper stop loss for such a position would have to be set below $100,000, which makes the risk-reward ratio unattractive. Therefore, the only interesting long scalping zone remains $105,000 to $105,000 East, $800. That's where significant long side liquidity sits, capable of triggering a bounce. The setup from yesterday's review remains valid. Since it's Friday, we're closely watching how Bitcoin futures close on the Chicago Mercantile Exchange, CME, around 2300 Kyiv time. If Bitcoin futures close near $113,000 and then the price dips to $112,000 to $111,000, this could be a window of opportunity to open a scalp long, because historically, when Bitcoin deviates over the weekend, it often returns to the Friday close by Monday. I explained this strategy in detail in a special educational post in our Telegram channel. Highly recommend reading it. Link in description. We're already over 66,000 members. Looking at the daily Bitcoin dominance chart, the picture is fascinating. A clear setup for an impulsive drop of about 5 to 7%, likely driven by Ethereum's strength. ETH/BTC has already bounced off key daily support, showing strong buyer reaction. The chart looks very bullish, hinting that Ethereum could outperform Bitcoin when BTC stabilizes. That's a bullish signal for the altcoin market overall. Today is a crucial day because at 15:30 Kyiv time, the U.S. Consumer Inflation Report, CPI, will be released. For 3 weeks, there have been no macroeconomic updates, leaving investors in the dark about the true state of the U.S. economy. The Bureau of Labor Statistics has even called employees back to work despite the shutdown to ensure this report is published, because it's the main data point for the Federal Reserve before its October 29th interest rate meeting. Markets expect core CPI, excluding volatile items like food and energy, to remain at 3.1%. I explained yesterday in detail in our Telegram post how to interpret this data, whether it's bullish or bearish for markets. The full inflation report and my live analysis will also be published there the moment it's released. Yesterday, President Trump unexpectedly pardoned Changpeng Zhao, CZ, the founder of Binance, who had previously served 4 months in prison and paid a $4 billion fine. Whatever your opinion of this event, to me it's a clear signal that the old rules of the game, the same ones that fueled the 2021 to-the-moon cycle, the manipulations, pumps, and chaos, are still in play. We might now be entering the last Wild West cycle before regulation fully sets in. A green light from the Trump administration and the White House for everything that looks crazy or even illegal on traditional markets. I believe that dev teams, funds, and whales will use this opportunity to cash out of their tokens. How? By creating hype, FOMO, and optimism, making everyone believe in bright prospects again. Interestingly, CZ recently announced the launch of a decentralized futures exchange, Aster, Binance's direct competitor to Hyperliquid. To farm potential airdrops, traders rushed to open leveraged positions, pushing open interest to record highs and making the market over-leveraged. Then an insider whale at Hyperliquid opened a $1.2 billion short, and just 15 minutes later, Trump announced 100% tariffs on China. That panic triggered a cascade of liquidations across all major exchanges. Tens of billions wiped out, while that single insider reportedly made $200 million profit instantly. If someone knew in advance, they made billions on insider trades and picked up spot positions at unreal prices. Levels the market shouldn't have revisited in a normal bull cycle. And shortly after all this, CZ is pardoned. Coincidence? Maybe, but it looks very suspicious. You know what's the clearest sign that this market still has fuel left? The divergence between retail sentiment and institutional behavior. At bull market peaks, retail is euphoric, while institutions quietly exit. But now it's the opposite. Retail is burned out and hopeless, while institutions are building infrastructure, filing ETF applications, and buying influence. Three crypto companies, Coinbase, Ripple, and Gemini, even sponsored a new $300 million banquet hall in the White House, funded by Trump's team. Tell me that's not buying influence. Meanwhile, Coinbase has been unusually active. They even bought rights to a famous crypto podcast, Up Only, for $25 million in NFTs plus $375 million for the legal entity, almost $400 million total, just to restart a show about crypto hype. You think they'd do that before a bear market crash? Unlikely. This looks like a massive bet that the bull cycle isn't over yet. So if you're holding spot positions, feeling tired or discouraged, chin up. Stay focused. We keep catching short-term trades on futures and earning here and now. I'm still monitoring the crypto market 24/7 for strong setups and sharing them in my free Telegram channel. With tools for volatility alerts, liquidation maps, educational content, and a friendly crypto community. That's all for today, friends. Remember, your likes and comments really motivate me and help promote this content. Wishing you a great day and an amazing weekend.